Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, you name it, across the world of blockchain and crypto all around the world. And today I have another amazing guest for you. Looking forward to this. His name is Graeme Moore. He is in charge of tokenization, the Polymesh Association. Graeme, welcome to the show.
Yeah, thanks for having me. Great to be here.
You're very welcome. So let's kick things off and ask you the first question I ask everybody. What is your background, and is it a logical background for what you're doing now?
Logical. I don't know how many people have a logical background in crypto, but maybe. So we can talk about it. So I graduated from university with an economics degree back in 2013. Wanted to get into finance, eventually worked at a bond fund, and then I worked at an investment advisory shop in Canada. It was the largest outside of the big banks. And then kind of got disillusioned with finance, or at least felt like I didn't really want to do that for the rest of my life. You know, I saw the investment advisors sitting around. I saw the support staff sitting around. They're just kind of, sitting at a desk, clacking away on keys, trying to earn rich people 8% on their money instead of 7%. And it just, I kind of lost the love that I thought I would have for the investment side of finance and quit my job. And an interesting thing happened when I quit my job is I felt like Warren Buffett's cloud was no longer hanging over my head telling me Bitcoin was very bad. I had obviously heard about Bitcoin, but I completely dismissed it. Warren Buffett was sort of my idol at the time, and he said it was bad. So I said, yeah, obviously it's bad. But I feel like, quitting finance, no longer having finance people telling me Bitcoin's bad, I started to really dive deep into Bitcoin and started to learn everything I possibly could about it, became totally obsessed. And then what happened in 2017 is, so I've been completely obsessed with Bitcoin for 2 years. And then I saw one of the co-founders of Polymath traveling around the world talking about this thing called Polymath. They're building this technology for these new things called security tokens on blockchains. And I just, again, completely fell in love with that idea now. And so I think it did actually become pretty logical where, I was obsessed with finance. Then I became obsessed with Bitcoin, and that led me to building finance tools on blockchains. And so Polymesh is a layer one blockchain built specifically for financial securities. And so, yeah, I feel like that was pretty logical. The other thing that I think ties in logically is I was very obsessed with Vine as well. I don't know if you remember Vine, the social media app, 6-second videos. And so I had a decent following there. I had 20,000 followers. I think I had 20 million views on my videos. And so when I approached the co-founders of Polymath originally, I said, hey, I'm pretty good on social media. I'm good at marketing stuff. I also know a ton about Bitcoin, and I have this finance background. Does that sound good? And so I think it was a pretty easy sell from that point. So yeah, I guess, there's that Steve Jobs quote, you can never connect the dots looking forward. You can only connect the dots looking backwards. And so, yeah, it does seem actually like this is actually exactly where I'm supposed to be.
Awesome. Yeah, it's that time of the year for me where we'll look backward and tell my fantasy football opponents what they shouldn't have done.
Yeah, of course.
So Polymesh, what's it all about? What makes it unique in the blockchain space?
Yeah, so I mentioned Polymath, what was the first real crypto job I had. And so what we were doing at Polymath is we were building tools on Ethereum for security tokens. Now we call them real world assets. Some people call them tokenized assets, whatever you want to call them. I generally refer to them as just financial securities that happen to be on blockchain rails. And so we were building all these tools on Ethereum, and we started to notice we don't like Ethereum for this use case. Now, Ethereum is a great general purpose tool, but there's a lot of quirks when you get down into the regulated asset capital market space that banks, custodians, regulators, they do not like. And so we said, instead of spending all our time trying to shoehorn in a protocol to make securities work on Ethereum, why don't we just build a better blockchain? And so that was Polymesh. And so we really boiled it down to 5 key pillars for the reason we wanted to leave Ethereum and build our own blockchain called Polymesh. And those 5 key pillars were governance, identity, confidentiality, compliance, and settlement. And so just to run through a couple of those, governance on blockchains is quite strange, especially when you start talking to a bank or a custodian or another regulated actor in the capital markets world. And so let's say you have $100 million asset on Ethereum. And then there's a contentious fork split. And just like we had with the ETH Classic fork, and now there's ETH1 and ETH2. Which chain has the real $100 million asset on it? Well, the answer is they kind of both do. But which chain has the token on it that has the actual claim to the underlying assets? Well, we don't really know. So do you create some schema where you decide, okay, we're going to pause trading for all of our investors for 6 months while we sort this out? Are we going to wait for Vitalik to tell us which chain is the real ETH? Are we going to see which staking power is higher on which chain? And so that's a huge question mark for banks. And if you're trying to trade hundreds of billions of dollars of assets every single day, every second, it's really just a non-starter. So you cannot have a chain where there's no canonical single version of the chain that is subject to potential chain splits. And so Polymesh always has one canonical version of the chain. Identity is important for us. On Ethereum, we kept hearing from banks and custodians, et cetera, if I pay $5 for a transaction fee, those $5 might go to North Korea. They really do not like that. So on Polymesh, all of the node operators have some type of financial license, and all of the users actually pass an identity check process. So to onboard Polymesh, you have to show your passport, for example, and say, I'm a real person, here's where I live. Confidentiality is really important to us. Again, banks trading assets against each other. Nobody wants to reveal their positions. Nobody wants to know what they're about to trade. So confidentiality is a really important piece for us. Compliance, a lot of what we were building on Ethereum back at Polymath was tools for compliance on Ethereum. And so we baked a lot of that compliance infrastructure and asset tokenization logic itself into the base layer of Polymesh. So you can create an asset, you can manage an asset, you can trade an asset, send an asset on Polymesh with no smart contracts required. So that's because the actual base layer of Polymesh understands that. And so it's just a much more scalable system that banks like using a lot more. And then finally, settlement's really important. The example I always use is if I find your address on Ethereum, I can send you anything I want and you cannot say no. That seems absolutely absurd to people in legacy finance. And how legacy finance works is sender affirms the settlement instructions, receiver affirms in settlement instructions, and only then can a trade take place. And so that's how Polymesh works. And so it was, based on those 5 pillars, just how do we build a blockchain specifically for capital markets?
I think it's kind of ironic that your acronym is GICS, and what a GIC does,
Yeah, funny.
So I want to ask you. I was going to switch gears. I'm gonna ask you. Yeah, I think I wanted to talk to you about real estate for some reason, and people wanted to do real estate too, embrace real estate. Investors would embrace real estate through tokenization. Why is that important more now than ever before?
I think what's really interesting about real estate, and so one thing that we actually announced very recently was the first ever tokenized church. So this is a church out of Colorado where it's actually quite interesting, where the church that's operating, or the congregation that's operating in there's a number of different ones, and they don't actually own the real estate of the church. So they actually rent space from someone else to use that church every Sunday or whenever they have meetings there. And so one interesting thing that tokenization allows for is the fractionalization of real estate ownership across many different entities. And so today, how could you buy real estate? You could lever up, you could go buy one house, or you could, maybe get a conglomerate together and you could buy one apartment building, or you could invest in something like a real estate investment trust, which is listed on a public stock exchange. But tokenization provides this interesting sort of third route where you can invest in pieces of individual assets. And so I could invest $10,000 into the church, or I could invest $100,000 into the church, while someone else invests $1 million into the church, someone else invests $1,000 into the church. And so this fractionalization of individual real estate assets provides this really cool third option for people to get invested into the real estate market without necessarily having to pay very high fees to the Blackstones or the Starwoods of the world who have these huge REITs, or taking on massive risk by buying one entire property when they maybe can't afford an entire property.
That's why, Yeah, it was a church. It wasn't just real estate, but it was a church that you invested in recently. How does that fit into your mandate, GICCS?
Yeah, so for us, what's exciting about it and how it fits is we want to tokenize every single asset in the whole entire world. And so I'll make sure that I have the caveat there where Polymesh itself is not, quote, tokenizing the real estate. We're not tokenizing any assets. We provide the blockchain so that other folks can do that. And so for the church example, that was One Hope of Colorado Church with Pastor Blake Bush. And so they're working with a company called RE Tokens, stands for real estate tokens. And so they're the ones doing the tokenization. They're advising on the real estate aspects and whatnot. And so for us, it's really just, this is one great real example that people can see in the real world where blockchain actually helps. The thing that everybody loves saying is Bitcoin fixes this. And then, people often have trouble finding real world examples where, okay, well, what is there happening in the rest of the blockchain world? There's lots of dog tokens, there's lots of trading, there's lots of gambling, there's lots of casino applications. But here's an example where you can actually see blockchain through how efficient it can be, through the automation of different aspects in capital markets, through the transparency. It actually makes sense to fractionalize units of real estate and many other assets and have them as tokens on a blockchain rather than pieces of paper that sit in a lawyer or a transfer agent's filing cabinet somewhere.
Yeah, and lots of big filing cabinets of companies. So,
yeah, definitely. And that's one of the craziest things. And really, we talked about kind of a logical progression for my career. That was one of the first things that was sort of an aha moment for me when I was thinking about securities on blockchains. And so one of my jobs, this was between third and fourth year university, I worked at a bond fund and I worked in securities administration, which, that's filing cabinet central of the world. And so what I would do every single morning is I would come in, I would print out pieces of paper from what we had in our internal database for how much of a bond we thought we owned. And then I'd print out a piece of paper from a custodian's web portal that said how much they thought we owned of a bond, or what the dividend payment should have been, or the interest payment or the coupon payment for something. And I would check those numbers, and sometimes they would match and sometimes they wouldn't. And if they didn't match, I would get on the phone and I would call someone and I would say, hey, this number doesn't match. Let's figure out what the correct number is. That just seemed so insane to me, that in the world of the internet, of everything being completely global, of being able to do anything digitally, we were still printing out pieces of paper, calling people to see what the state of the world is. And so with blockchains, the really cool thing is the token is the asset, and the token is also programmable, and the token can do certain things to ensure that everyone is on the same page. If I see a token on the Polymesh blockchain and there's 5 tokens in a wallet, no one can tell me that there should be 5.5 tokens in the wallet, because we can all see there's 5 tokens in the wallet. And so that's one of the really cool things about blockchain that I don't think a lot of people have grasped, just because they haven't worked in capital markets. They haven't seen, the back offices that are going through spreadsheets after spreadsheets after spreadsheets, printing out pieces of paper, calling people on the phone to see what's going on, reconciling trades, sometimes weeks, months later. In crypto, the trade is the settlement. The reconciliation doesn't even matter at that point. And so that's some of the really cool stuff that I've been excited about, working with Polymesh and just more broadly with tokenization.
I like it too. I did work back office for many years, so I get it. And I do get also, and I don't know what these are. Maybe you can help me understand them. We want to fractionalize real estate. You want to fractionalize assets. There are challenges in addition to pushback from TradFi folks, right? With actually being able to do fractionalization and fraction. What are those challenges, and how do you solve those challenges?
Yeah, I think there's a number of challenges just from a technical point of view. Is we're the first people in the world doing this, right? We now finally, though, we've seen some great stuff coming out of Franklin Templeton, out of BlackRock, Hamilton Lane. We've seen a number of companies that are starting to do this for funds and the tokenization of funds. We're seeing folks like RE Tokens, tokenized real estate, but it's really just making sure that you get those pieces right at first from a technical point of view, because no one wants to be, that massive asset manager who took this newfangled technology called blockchain, and then, something blows up in their face. And so I think ensuring that you have the right guardrails in place from a tech point of view, and also from a regulatory point of view, are very important. And so one of the nice things from the regulatory side of things, right? And so yeah, I'd say the two issues, biggest tech and then regulatory. And so the nice thing from the regulatory side of things is securities laws are pretty well worn. It's a well worn path how to raise assets and then sell securities to people. And so that side of things actually doesn't really change much. And that's one question that we always get is, okay, well, the regulators are never going to allow this, but they're already allowing it. They've been allowing it. Really, the only thing that changes in offering docs, for example, is that someone says these securities may be sold as tokens on a blockchain, and here's the address of the tokens and where they live. So the regulatory aspect is actually quite nice because it's already been used for many, many years. There are some things coming up now where we want to deviate from the existing world and the existing securities laws that have been implemented because we have better tools now in terms of blockchains. Like, do we need a transfer agent for a private securities offering with a blockchain? Well, I mean, the blockchain is kind of the transfer agent. I can click a button and I can send a dividend payment to 5,000 addresses anywhere around the world via stablecoin in 5 seconds. So do I need a transfer agent to log that information, then reconcile, and then ensure that the SEC has a door they can go knock on? I don't know. And so that central securities depositories, do we really need those in the world where the blockchain is potentially the central securities depository where you can see all the assets and who the ownership belongs to? And so these are some of the questions that are pretty interesting. And I think the next 3 to 5 years are going to be really interesting, where we see some regulators around the world say, let's create a sandbox where you actually don't need onerous regulations because the blockchain solves a lot of these issues with automation and transparency. But for now, we still have to do things essentially the exact same way they were done in the old world. And yes, they're a little bit more efficient, they're a little bit more automated, a little bit more transparent, but we still haven't even seen the full scope of how much blockchain is going to help capital markets.
That is making sense to me. I interviewed a company a couple of years ago. I actually interviewed a founder 3 years ago, and then another person a couple of years ago. We talked about how blockchain can transform transfer agency, right? So that I'm thinking might be the future of RWA tokenization. But how can we really decentralize Wall Street and help Main Street?
Yeah, I think that's a huge task. That's going to take a very long time. One of the things that I am very passionate about and very excited about is self-custody. And so who holds their own securities today? I say almost nobody. You can request to get, a paper share printed out and you can hold it, but no one wants to do that. Computer share doesn't want to do that. Nobody wants to do that for you. And so one thing I wrote about is a piece I had in Fortune a couple of years ago when the GameStop fiasco was going on. And Robinhood just didn't let anyone click the buy button for shares of GameStop. And so that just seemed so ridiculous to me that I could sell a certain asset, but because of one broker's thoughts on the current day's trading, I can't buy the asset. And so why could I not buy it? Well, because I'm stuck in the Robinhood siloed database. I don't have access to another brokerage account. Maybe I do, but most people don't. Most people use either Robinhood or TD Ameritrade or Chase or whatever they use for their brokerage account to access stocks. But what's really cool about self-custody is that there will start to develop these decentralized liquidity pools. And if I'm self-custodying my assets and then I have something like a 2 of 3 multi-sig with State Street or with Fidelity or with Robinhood, I have 2 keys, they only have 1. I can move my assets instantaneously anywhere else that I want to. And so that's a future that's really exciting to me. That sort of, I guess, decentralizes Wall Street, or at least limits the control that intermediaries have over what I can do with my own assets and with my own money. And so being able to click a button, go to a different platform, click a button, go to a decentralized infrastructure where I can trade my GameStop stocks on Uniswap. I do think that's a possibility in the future. And so that's something that's really exciting to me is the self-custody aspect of securities. I mean, I can custody cash anytime I want. I can walk around with $100. I can walk around with $1,000. It's really hard to walk around with stocks. It's really hard to walk around with bonds, with pieces of real estate. But I want to be able to do that because I don't want any intermediary in capital markets to have any type of undue influence over what I can do and when I want to do it.
My wife works in the securities industry, so I haven't touched stocks in many years. But if I could, like, if you had privacy and you had these RWAs and stocks, where they wouldn't know that you bought them, like, how would that be a problem with the SEC and with regulation? And like, how do you be able to work collaboratively to create the ability for people to have privacy and then also abide by these 100-year-old regulations?
Yeah, so that's like the golden gun that everyone's going after right now is how do you have, and so I would call it confidentiality, not necessarily privacy. I would say privacy is more like, closed siloed databases. Confidentiality is more, how can we obfuscate certain information where I don't want specific third parties to view it, but I'll allow other third parties to view it. And so that's something we're working on. We actually have a cryptographer on our team now, who has won awards for this kind of stuff, and we're working on figuring it out. This is what we talk to all the big banks about: is how can we get confidentiality on chain, where I, Graeme Moore, can see all of my assets. The issuer, whether it's Apple issuing Apple stock or a government issuing a bond, they can see that I'm Graeme Moore and I hold these specific tokens. I can share this information with the SEC whenever they request it. But I don't show JP Morgan my token balance, because I don't bank at JP Morgan. They're not my broker. And so how do we allow certain parties who need to have access to information have access to it easily, while preventing other parties from having access who I don't want to have access to it and who aren't required by law to have access to it? So yeah, that's really like what everyone's clamoring after right now, is how do we do that? And so what we've done in the interim, and that we think is a really important thing, is we've actually created a private version of the Polymesh blockchain. And so that's similar to some other private solutions that banks have been using in the past, where a lot of banks still, and a lot of asset managers, custodians, et cetera, still aren't comfortable putting $100 billion of assets onto a public blockchain. There's just too many concerns for them. There's too many third parties. There's too many potential issues with data leakage, et cetera, where they still want to use a private blockchain. And so what we've said is, okay, great. Here's this private version of Polymesh. Use the private version of Polymesh right now while you're still figuring out your strategy for how to use public blockchains. And then when you're ready to use the public version of Polymesh, 6 months, a year, 2 years down the line, you just change the endpoint. And instead of pointing to the private version of Polymesh, you point to the public version of Polymesh. And so that eliminates the need to rebuild an entire bank's capital, to rebuild their tech stack, essentially, or custodian's tech stack. And so what they're doing today is they're building on some type of private solution, and then they're thinking, 2 years, 3 years from now, they're going to move to Ethereum. They're going to have to rebuild everything. And so what we're saying is, don't rebuild everything. Use the private version of Polymesh, and then switch to the public version of Polymesh when you're ready.
I have never interviewed somebody who's building a private banking blockchain using Hyperledger or the Accenture editable blockchain. It's always been public. So or trying to be a private version of public. So what's the benefit?
The benefit in using a private blockchain?
Yeah, what's the benefit in getting off the private blockchain and going to public for these companies who haven't listened yet?
Yeah, I think the benefit in moving to a public blockchain is that's eventually where all of the liquidity will be. And so I think part of what is exciting to banks and asset managers about the future of blockchain is this global liquidity pool with attestations and technology where anybody anywhere around the world can click a button and access liquidity for a given asset, without necessarily having to go through onerous onboarding requirements, because they've already been onboarded by another party who is allowed to dictate access to specific assets or specific liquidity pools. And so I think they know, and this has been really encouraging, actually, and things have changed a lot in 2024 compared to even last year or 2 years ago, where they finally realized public blockchains are the future. I think the Biddle Fund from BlackRock was huge for that. Benji from Franklin Templeton was huge for that. There's a few others as well that have really shown that they are committed. The liquidity is just not there yet. And so for them to say, oh, we're going to pour all of our resources into this thing because we think it's the way forward 5 years from now. They're just not into making those types of long-term bets until they see the fruits of their labor there, so to speak. And so I think it's going to come, and it's really about global liquidity pools and permission to access to specific assets all around the world with jurisdictional compliance kind of built in. But yeah, it's just not quite there yet. So that's why we haven't seen it, but it is going to come, and the big players do understand finally that is the way forward.
Very cool. So with the tokenization, you have integrated recently with Alpha Point, right? What's that all about? What's integration about, and how does that help?
Yeah, and so for Alpha Point, they're similar in terms of platform infrastructure to the company RE Tokens, right? So RE Tokens tokenizes real estate assets. Alpha Point tokenizes anything. Effectively, is what they're working on. And so Alpha Point, if people don't know, they're the back end tech infrastructure for a lot of exchanges. So they've worked at CME Group. Alpha Point is actually who helped El Salvador with the Chivo wallet. If you've seen, people holding Bitcoin in El Salvador. So Alpha Point. I'm sure someone has used Alpha Point. If they're listening to this podcast, they just didn't even know it because they're the back end tech infrastructure for a lot of different things. And so, the cool thing there is just getting more assets on chain. We're really excited. Eventually, I don't know when it will be, but we're recording this September 9th. I'm actually doing a webinar with Alpha Point 2 days from now, or 3 days from now. And then we'll likely be announcing some clients that are using Alpha Point in conjunction with Polymesh. And so more assets on chain is what we want. That's what everybody in crypto wants. We want to take that, total value locked in blockchains from $1 billion to $1 trillion to 10 trillion to 100 trillion eventually. And I really do think every single asset in the whole entire world will live on a blockchain at some point. Maybe not every single person's, pair of headphones or every bicycle, but I mean, it'll be as simple as clicking a button and putting your asset on chain. So I think almost every asset will live on chain. And so with Alpha Point, we're really excited to announce eventually some clients that will be using them. And I think one important thing to talk about for why Alpha Point chose Polymesh is that Polymesh is API driven instead of smart contract driven. And so we talked a bit about how the logic for asset tokenization and trading and settlement is baked in the base layer of the chain. If Alpha Point used Ethereum or Solana, they would have to not only select that blockchain, but then use someone else's standard that they built on that blockchain. So initially at Polymath, we built the ERC 1400 standard on Ethereum. And so they might use the ERC 1400 standard created by Polymath, maintained now by random people in a GitHub, and then also select a different transfer agent provider, and then also select the Ethereum blockchain. And so building a lot of smart contracts or leveraging someone else's smart contracts is not something that people like doing. I know developers in Ethereum love smart contracts and they think it's the greatest thing in the whole entire world. Banks hate them. They really do not like them. There's a lot of risk using those things. There's also a lot of rules around banks and large financial market intermediaries using specific tech providers. And so for a bank to use a blockchain and then say to their regulator, we're using this smart contract standard by these 3 people on this GitHub who are faceless and nameless. No, they just will not do that. And so the nice thing about Polymesh is they can vet the Polymesh blockchain, and that's the only party that they need to vet. So Alpha Point vetted the Polymesh blockchain, and they use the API-driven standards that are on the Polymesh blockchain rather than having to develop their own smart contracts or use third-party smart contracts.
That makes a lot of sense to me. Very cool. So, and I definitely heard of Chivo. So, I want to change gears a little bit because you are an author, and I want to ask you about your book. You wrote a book called B is for Bitcoin. So why should people read that, and what are the key takeaways that they could get by reading your book?
Yeah, B is for Bitcoin is the first ever ABC book about Bitcoin. So I published this early 2018. And the idea there was my sister had just had a kid, and I was thinking about getting her a book or two and reading to her. And I was looking at the books available, and do I want to read to her A is for Apple, B is for ball? No, people have been doing that for hundreds of years. It's not that exciting to me. I'm a Bitcoin guy. I'm a crypto guy. I wanted to read instead something more like B is for Bitcoin, which is A is for altcoins, busts and booms. B is for Bitcoin, when moon. like that's the type of book that I wanted to read to my niece. And so that was the genesis of the idea that I had back in 2015, and then came to fruition in 2018. Well, what takeaways will someone get from reading the book? They'll learn their Bitcoin ABCs. And so, I've heard a lot of great feedback from people where, all they wanted to do was teach their kid A, B, C, D, E, F, G. And then now they can do it with a Bitcoin twist to it. So yeah, it's been really cool to see, all the people buying it, gifting it to their friends, and just getting that good feedback.
Awesome. Sounds good. Sounds like my kids are 15 and 11 now. So, but I can still show it to them, and then they can show their kids someday.
Yeah. The idea that I also had for it was, it's a coffee table book as well. It's a big, large, colorful book. It looks great on a coffee table, and then your guests come over and they go, "Oh yeah, I forgot you're the Bitcoin guy." And then you go, "Yeah, can I talk to you about Bitcoin for the next 5 hours?" Or at least that's what I do to my guests when they come over.
Awesome. So, I want to thank you very much for speaking with me today. I enjoyed learning about Polymesh, learning about your book, learning about you. Appreciate it. So I really have one last question, and it's how can people find out more information about you, about Polymesh? How can they do that?
Yeah, I'm all over the interwebs. You can find me on LinkedIn, Graeme Moore. I'm on X. It's at MooreGrams, MooreGrams. And then for Polymesh on X, we're Polymesh Network. Join our Discord server as well. It's polymesh.network/Discord. And then the website is polymesh.network. So yeah, come give me a shout anytime. Always happy to talk about anything crypto or anything Bitcoin related.
Awesome. Thank you very much for your time today.
Thanks. Yeah, it was great.